Thanks so much for tuning into this earnings interaction with the management of CCL Products. Their consolidated revenues were up a healthy 43% on a YOY basis. And while raw material inflation presumably had an impact on the EBITDA margins, the questions to the management would be whether they are safeguarded enough from any raw material cost inflation because of the upsurge that we see in coffee prices, and the expansion plans that presumably would have come on stream by now, and how would they aid the revenue growth for the quarter, arguably for FY23 over FY22. Challa Srishant, Managing Director of the company, Johnson, right now to talk about that. Srishant, great having you. Thanks for joining in. Hope all is safe.
Yes, all good. Thank you, Neeraj.
Thanks for joining in today. Srishant, let's talk about the revenue growth. A healthy 43% YOY growth, if I'm not wrong. How much of it was value? How much of it was volume? And what's your sense about how demand is shaping up or would shape up in the quarter currently?
So if you look at it for a 9-month basis, on volume wise, we've had about 16-17% of growth in this year. Most of the other top line growth that you're seeing is because of the increase in raw material prices. In fact, that is one of the guidances that we had given in the beginning of this year as well, that because of the increase in raw material prices, the EBITDA margin appears to come down, though the per kg basis remains the same.
Okay, so that was for the 9 month. For the quarter as well, you would reckon 16-17% volume growth, or slightly more than that, or less?
It will be much more than that. I think around 25% or so will be the actual growth in this quarter, 25 to about 27% approximately.
Okay. Would that be seasonal in nature, Srishant, or do you reckon this quarter was slightly different than the others?
So normally, yes, quarter 3 and quarter 4 will usually be the best quarters for us. But in all fairness, we're comparing last year, the same quarter versus this quarter. And last year, we've actually seen a slight change in pattern where we saw more customers buying more than quarter 1 and 2. This year, we're seeing more offtake in quarter 3 and 4. So traditionally, it's usually quarter 3 and 4. Last year, I think there was a little bit of advanced buying and panic buying that was taking place, anticipating multiple shutdowns.
Right. Okay. So suffice to say that there is a possibility that the kind of volume growth that you've shown, and it's never safe for sure in these COVID impacted times, but you reckon that Q4 could also show a decent picture on the volume front?
Yes, hopefully on a similar lines as Q3. So we had given a guidance of about more than 15% growth in this year, and we are set to achieve that. And top line growth will be more than 20% because of, again, raw material prices and everything else.
Do you guys get into this whole business of trying to, maybe not from a business perspective, but just from the fact that you are in the business, trying to predict or trying to imagine what coffee prices could be at? Because it's been a unnatural surge of sorts.
So in all fairness, we do have a good indication about what is happening at the ground level, because we're dealing with all the major suppliers from every part of the world. So whatever news that you get and what you see at the ground level are two different things. And the indications that we are getting now is that as far as the Arabicas are concerned, yes, there has been an actual physical damage of the crop because of frost. So there is going to be a shortfall going forward. But as far as the Robustas are concerned, there is no real shortfall that is there. In fact, Brazil itself, they're expecting a fantastic crop for Conilons, which is the Robusta version in Brazil. Vietnam and Indonesia also have a good crop. There's a crop cycle that is there in one particular, out of every 4 years, 1 year, it's a little less yield. So there's no real shortage in Robusta, and Robusta is what we buy, about 95% of what we buy. But the catch over here is Arabica prices are going up through the roof because of a genuine shortage. When the gap widens to this extent, people do try to transition to Robusta, at least to a limited extent. So that's why we would see a follow-up of prices going up in Robusta as well.
Okay. So
So
I was of the belief, I mean, based on what I read, that because of very unseasonal and heavy rainfall in south of Brazil, a lot of crops got damaged there and maybe coffee crops too. You are saying coffee supply from Brazil is not as impacted.
So the Arabica in Brazil has been impacted, but the Robustas actually, thanks to the rainfall, they're confident about a very good bumper crop, in fact, going forward.
Oh, interesting. Okay. Okay. Now I see what you mean when you say that you actually have a better sense of what's happening on the ground. Just a word on, therefore, what could this mean for raw material cost inflation and EBITDA margins? Because I reckon your EBITDA margin probably got impacted about 140 odd basis points on account of green coffee prices moving up.
Yes, that's true. So what's happening is there's almost a 70% increase in raw material that has come up. But in all fairness, whatever contracts we are executing right now, the true impact of that increase in green actually set in. Because we've done our contracts already long back. We've done our contracts about a year ago. We had covered our green coffee since we work on a cost plus basis. So that green coffee will be getting delivered now. And those are the contracts that we'll be executing now as well. So we are covered on a back-to-back basis. So the actual top line growth, what you're seeing right now, the EBITDA impact or the reduction that we're seeing right now is actually quite minimal, as you were putting 140 basis points. Going forward, when the true impact of the green coffee prices sets in, that will further expand. Our per kg margins will still remain the same, but the EBITDA margin, the difference is going to go beyond 2.5-3% as well.
Sorry, so am I getting this correct? You reckon that there could be optically, as you said, yes, the EBITDA margins could contract a bit more?
Yes, they will. And the top line will grow a bit more disproportionately.
I get your point. Okay. Just one quick follow-up on the export picture as well. I reckon that you probably in 2021 or calendar year 21, there was about an 18-20% growth in exports. How was it for the quarter gone by, and how do you expect it for the current quarter?
Yeah, so the growth rate is exactly as you had mentioned, and current quarter also we're expecting a similar growth. And both we have units in India and Vietnam as well. So both entities we are seeing a good offtake. The Vietnam factory actually, the new capacity has come online last quarter, and we are now running at full capacity over there as well.
Wow.
So we've already initiated our steps for expansion for next year as well, as for this year. Sorry.
Oh, okay. So that was going to be my next question, because I thought that there was trial production for the India facility, the agglomeration capacity, and the augmented capacity in Vietnam would have probably come on stream. So do both of these contribute in the current quarter itself for your top line growth? And when you say that you've also set up capacity plans for the year, can you elaborate a bit more on that?
Yeah, so the agglomeration is not contributing much in India right now because we didn't really fully come online yet. For the packing unit, we are still transitioning the equipment and everything. So that will happen by Q4. But Vietnam, we have come online in Q3 itself. So a part of that impact is what we are seeing right now. So previously, we were not able to go beyond a certain volume because of production constraints. So Q3, we were able to go much more because that constraint was addressed. And this Q4 also, we're expecting to be on the similar lines because the capacity is online now.
Okay. So final question really, and just maybe a last set of couple of questions, if you will. Would it be safe to assume then that therefore you could actually do northwards of 1,400 odd crores for FY22? And my principal question would be, Srishant, there are a couple of initiating coverage reports on your company, people who seem to have studied your company well. I use the word seem to have. And they believe that from about 1,400, 1,500 crores, that could be a bit of a a jump to about 2,000 crores FY23, 2,500 crores FY24, with margins at about 23-24%. Safe estimates, you reckon?
So what we've been targeting is typically around 18% growth year on year, which means that we're targeting a doubling of top line and bottom line within 4 years. So that is our a projection that we've informed the analysts as well. And as you can see, this year itself, we are on track. This is year one. And within the next couple of years, we should hopefully achieve that doubling of top line and bottom line.
Okay. No, I think that their bullishness probably stems from the fact that a couple of your capacities have come on stream only in the last 1 month. So maybe calendar year 22 will actually see a big bump up in the top line.
Yeah, there will be a bump up next year, but the new capacity that's going to come online, actually, we are doubling our capacity in Vietnam by Q3 of next financial year.
Okay.
So once that capacity comes online, it will take some time for things to stabilize and ramp up. So we've planned carefully for the next 3 years at least. We'll make sure that we have sufficient capacity to cater to the market needs.
Yeah, I was just about to ask you, demand won't be a problem.
Yeah, demand is not a problem from our side. Because of the economies of scale that we have and the range of products that we have, our ability to convert existing customers and get new customers is much more.
Okay.
So we're quite confident.
And no fundraising, right? Last question. No fundraising for any of these capacities?
No, nothing at all.
Wow, super. Keep it up, Srishant. Thanks so much for speaking to us today, and all the best for the year 2022.
Yeah, thank you.
And viewers, thanks for tuning in.